Have you ever wondered what it would be like to invest in an Amazon, a Tesla, a Netflix in their very early years before they even hit the stock market? Could you imagine the returns you would make? It would be insane. Well, did you know that's actually possible through a type of investing called crowdfunding? Some of these startups that are looking to raise money will launch fundraisers on crowdfunding platforms where you can participate and you don't need a large amount of capital to do it. So this video is all about what is crowdfunding. I'm going to show you the platform that I use to invest through crowdfunding. I'm going to tell you a bit about the types of startups that I've invested in, and I'm also going to tell you how to make the big bucks. So let's get right into the video. Welcome to Millennials with Money. My name is Johnny, and let's get the usual disclaimer out the way. So this is not financial advice. And investing in startups through crowdfunding is very risky and you could lose all of your money investing through that. Now that's out the way, let's get started with the good stuff. So when you think of the word crowdfunding, you maybe think, your friend or someone on the internet who wants to raise money. Maybe it's to go to school, maybe they've got some innovative new project, maybe they're looking to repair or rebuild something. Well, crowdfunding in the investing sense isn't quite the same. Yes, the companies want to raise money and they want you to contribute to their fundraiser, but in return you will get a share in that company or the right to a share. And what this is known as is equity crowdfunding, and this is the type of crowdfunding that I'm going to be talking about in this video. Maybe you've heard some of the jargon, some of the following words being thrown around when it comes to startup companies. Words like seed capital, words like Series A, Series B. So what does this all mean? So seed capital is the kind of fundraisers that very new startups go through. They're probably maybe a couple of years old and it's going to be one of the first times that they're looking to raise money. And typically seed capital refers to between 250,000 euros and 1 million euros. That's the total amount that the company wants to raise in that fundraising round. You then have startups that have maybe been around for a bit longer and they're looking to raise a bit more money to help boost their growth a bit more. Typically 2 to 5 million euros in those rounds, and those are what are known as Series A startups. And then when a startup becomes more mature, it's been around for quite a while, it's got a fully developed, working, functioning business model, then it may look to raise additional funding in a Series B round, and this is typically around 6 to 10 million euros of funding that they'll be looking for. When it comes to Series A and Series B startups, it's typically venture capital firms that are providing that capital, and they'll look to put up typically about 30% of that capital. So clearly they're investing a lot of money. In the seed capital phase, that is where the crowdfunding platforms can come into play and where smaller investors can pitch in to help them work up to their fundraising goals. And there's several crowdfunding platforms online that you can use for crowdfunding, such as Seeders, the Crowdspace, and there's the one that I use, which is known as Crowdcube. And that's what I'm going to show you now. I'm going to show you a little bit of the platform, how it works, and how to use it. So let's go take a look. Okay, so the Crowdcube app is available on the web and it's also available on mobile phones. So we're going to look at the mobile version here. So what I'm on right here now is the Discover page. And on this live Discover page, this is where you'll see the different startups that are listing their business and listing their fundraising. So we scroll down here, we can see a load. Let's just pick one out and we'll have a look at what we can find out. So let's pick Do. So now we're on the page, we'll have a look through. So we can see most crowdfunding campaigns last 30 days on this platform. You can see there's 28 days left on this one. The company has raised £56,540 of their £50,000 target, so they're overfunded. That doesn't mean that you can't stop contributing. However, you can see I've still got the invest logo, so you can actually contribute until the crowdfunding campaign is closed. And you can see that that 50,000 represents about a 5.35% equity in their business. So they're valued at more or less 1 million euros, which is what we can see about here. You can see that there's 108 investors that have participated, and you can see that the shares are priced at £10 per share at the moment. Now let's scroll down and have a little look at what the business is. So it says here, essentially think Uber for hair. Okay, so yeah, mobile hairdressing, order a barber, order a hairdresser whenever you need, whenever you want. That seems to be their business model. And then here we've got a bit about the idea. So nice little bit about the concept, explained a bit more. We've got some videos, we've got some photos here. If we scroll through, let's go down a bit more, we can see the team. So here it will tell you who is behind the project. It will tell you a bit about their experience as well, which is always good to know. It's good to know who are the people leading the company, what's their experience and what's their vision. Now we go down to the documents section. So some companies will make their documents publicly available, so you can see everything. Others are maybe restricted documents. That means that you need to request access, and you can see I've got the request access button there. And then normally the startup, the company will approve your access and they'll let you see that document. Typically in the restricted documents, you'll see like investor decks, pitch decks, maybe financial projections. This is stuff that I'll talk about in a minute, but it's stuff that you essentially need to help you make your decision on investing. Scroll down some more, we got company updates. So maybe the company has an announcement to make, maybe they've got a new product, new logo, whatever. Here we can see their latest update is that they're 100% funded, really good obviously, and that they're still going with their crowdfunding. Now if we scroll down and go to the discussion section, now this is really useful if you read something or you have a question about the company that you want answered and someone from the company can answer you. So let's go here to competition. We have a look. Someone asked a question about who their competitors are, what their competitive advantage is, and then you can see the Do team gave them a response afterwards, and then a bit more discussion, and then greater explanation. So it's really good because you can get first-hand answers. It'll maybe give you a bit more insight into the company, and you get your questions answered, which is the most important, right? Because you want to know what you're investing in and you want to understand it. And then some companies are generous and they'll give you nice little freebies, nice rewards for investing in the company. So let's have a look here, what they're offering for £10. There's no rewards. So if I invest more than £200, I can get a 20% discount on my first order. If I invest £500 or more, then 50%. I wonder what £1,000 is going to be. Oh, yep, a free Do order, and I get an exclusive Do t-shirt if I order that as well. Nice. And then if I invest £5,000, I get lunch with the founder of Do. Exciting times, right? And as you see, if I scroll to this last one, you can see the type of share changed. So we have ordinary shares nominee and we have ordinary shares direct. Now the difference here is simple. If it's nominee, if it's ordinary shares nominee, then essentially Crowdcube is the custodian of your shares. So they are a trust, essentially. They hold your shares on the platform. And if it's direct, then the shares are directly in your name. In both cases, you have the same rights. You have the right to vote, you have the right to receive dividends, etc. So it's just a matter of whose name the shares are in. Then maybe just one more thing to point out as well. I'm going to change company to demonstrate this. So Brew, a Swiss startup. So they have a convertible round. Now what a convertible round is, it's where you can invest in that startup, let's say multiples of £10. That's how it works on Crowdcube. But the company is not obliged at this stage to give a valuation for their company. What you'll essentially have when you invest is a convertible, which at a later date, so once the period of the convertible is up, it may be a couple of years, the company will say, okay, this is how much the company is worth, hence your shares are worth this much, and that will be how much your convertible becomes. So your convertible essentially becomes shares. And even though Crowdcube is based in the UK originally, there's not just UK companies on here. If we ever scroll down, you can see there's a Danish startup, we can see Brew, that's a Swiss startup, and then we've got Delivery, which is a Spanish startup. So it's not just UK based, you got a nice range of different international startups on this platform. And let's say I see one that I particularly like, let's say Delivery. If I press this star button here, and then I go to my followed section, you can see Delivery appears here. So you can have a nice little list of startups that you're following, that you're interested in, so you can always come back to it later. And it's good because that way you also get notifications. So if the company posts an update, you'll get a notification to your phone. And if the crowdfunding campaign is about to run out, so say there's only a couple of days left, you'll also get a notification so that you don't miss out. And of course, I had to show you my portfolio on here of what I've invested in personally. So Genuine Impact, you'll have heard me talk about in a couple of videos. It's obviously an investing platform that aims to make access to investing knowledge easy and simple in a really innovative format to get younger people investing. So obviously I'm really on board with that concept. I really like it. And then EverUp. So if any of you follow Graham Stephan, you'll know that he's an angel investor in a bank called Yotta Bank. And what Yotta Bank does essentially is when you save money with them, they'll enter you into prize draws and you can win small or you can win really big. And the idea is that you get more money back than you would from savings yields. Essentially, EverUp is the UK version of Yotta Bank. So it's the same concept. And of course, like Genuine Impact, it's trying to do something interesting, something fun, something a bit different to get people on track with their finances. So of course I was on board. So that's why I invested in these two, because they're concepts that I like and that I get behind. So that brings me to my criteria of why I invest in these companies. How do I pick them? Because obviously they're not dividend paying stocks. They don't have a big financial history behind them. So how do I pick these companies? Because you don't necessarily have access to the same financial information as you do with companies that are listed on the stock market. Remember, these startups, they're not listed, so they're not obliged to disclose their full financial picture. What you got to do is you got to think a bit more from a business perspective. You got to think, how are they generating their money? Is this going to work? How are they going to advertise their product, their service? How are they going to grow? Is there a point in time at which this company can be bought? Because that's essentially how you make your returns. Again, I'll come to that later, but you got to think, what is the potential for this company to be acquired? And for them to be acquired, then it's got to be a business model that works, and it's got to be one that has long-term potential. Don't underestimate the importance of what I've just said. Yes, it's important to invest in something that you like and that you believe in, but statistically 90% of startups fail. So it's really important that you do understand how the company operates, what their business model is, how they generate money, and what their long-term potential is. And this long-term potential part is super important, if not the most important part that you need to understand, because it leads into the big question: how do you make the big bucks? How do you get crazy returns from crowdfunding investing? Well, it all comes down to having an exit, someone who will buy your shares from you. Now, keep in mind that buying and selling shares from startup companies doesn't work like the stock market. You don't have a buyer ready within market hours who, at the click of a button, you can sell your shares, cash them in, and get your return. No, a physical buyer needs to appear and needs to make an offer to buy those shares. If that doesn't happen, you don't get your money back. You have the shares, but you won't make returns until the moment that a buyer is found. Now, there are three possible scenarios where you might find a buyer for your shares. Number one is if the company decides to list on the stock market through an IPO. Number two is if the company becomes the target of a merger or acquisition. And number three is if the startup decides to do a share buyback. In each of these scenarios, you have someone who's buying shares in the company. So in the case of an IPO, it will be an investment bank that's taking the stock public. In the case of a takeover or a merger, it will be the acquiring company. And in the case of share buyback, it will be the startup themselves. Now, share buybacks are a very standard way that companies will compensate you as an investor. And that will all depend on how the startup values the company at that time, how much return you will get. But let's take the case of an IPO and a merger or a takeover. In both of these scenarios, for a company to become listed on the stock market or to become the target of a merger or acquisition, it would have to appear very attractive to someone. So someone will be willing to pay a high price, a lot more probably than you got your shares through the crowdfunding platform. How much do you ask? Well, let's have a look at a few examples. Now, once upon a time, a fintech company called Revolut, which I've talked about in some of my recent videos, did a crowdfunding round on Crowdcube. They raised £1 million and their business was valued at £42 million as a result of that. A few years down the line, an investor called DST Global came and invested £250 million into Revolut. And that boosted Revolut's valuation to £1.2 billion, meaning that any investors that exited following that DST investment got 19 times their money in returns, which is good. Now, as great as 19 times your money sounds, it is a bit of an exceptional success story. Probably more reasonable expectations to have is maybe 100 to 200%. You can get up to 500% in certain circumstances as well, but you'll most likely double or triple your money. In all fairness, the returns that you'll get from crowdfunding and startups is probably a lot better than you'll get in the stock market, and you'll also get it in a much shorter time. Obviously, of course, though, there is risk involved, as we've seen through this. 90% of startups fail. There is a possibility that you don't get your money back. But you can also see that if you really like a startup, if you want to support it, then you can pledge a bit of money through the crowdfunding. You'll get some shares back, and if all works out well, then the company does well, and you on top, if it's bought out and you find an exit, then you'll get a nice return on the money you've invested. I hope you found this video useful as an introduction to crowdfunding. Leave a comment and let me know, are you interested in crowdfunding? Are you using any of the platforms like Seeders, Crowdcube, the Crowdspace? What startups have you invested in through crowdfunding? Now, check out these videos if you enjoyed this one, and if you're not yet subscribed to my channel and you want to see more content like this, then make sure you hit the subscribe button with the notification bell so that you don't miss a single update. I'll see you on the next one, and let's get this money crowdfunding style.